Welcome to episode 52 of Contrarian Corner. I'm Ben Kellerin. Today we have very special guests on to talk with us about some of the recent events going on with macro, the U.S. and China, energy, everything in between. I think it'll be interesting conversation, and someone that I've been following his Substack and his Twitter for a while. I think it'll be fun to pick his brain on where things are going, especially for the energy space, because he's had some interesting tweets and charts about his view on what he sees coming from here. But I think it'll be fun to talk to him, and I appreciate him taking the time. So, Purple Drink, thanks for coming on.
Oh, no worries, man. Thank you for having me on. Definitely been reading your stuff too. Think it's interesting. It's good to be able to talk about this stuff.
Yeah, so if you couldn't tell, Purple Drink Capital is a anonymous handle, but I think if you could give our readers a little bit of an introduction on your background, I think that'd be a good place to start. I know you have a little bit of a energy background. I think that'll be interesting for our listeners.
Yeah, of course. Can't believe I'm dating myself this much, but in 17 got my MBA, then out of business school worked in energy and then industrials investment banking for a little bit. Then hopped over to a different firm where I structured energy transactions, specifically nat gas transactions, like physical supply deals. Did that for about 5 years. Been trading equities along the way, probably going back to about 2019. And that's fortunately gone pretty well. So have been doing that for full time for about a year now. And definitely feel like it's an interesting time for markets, interesting time for energy specifically. So it's fun to talk about.
Yeah. No, I think to your point, like there's a lot of uncertainty, but I'm not sure how accurate some of these indexes are on, oh, the uncertainty index is at its highest it's ever been. I'm like, I don't know if this really compares to COVID lockdowns as far as people wondering what's going to happen. But I know there's definitely a lot of moving pieces. I just don't think it's going to be as bad as things were, I guess, 5 years ago now, but feels like longer than that. But I don't know what you're kind of seeing on like the U.S. and China potential trade war, the tariffs, the on again, off again from Trump and his team. Like, there's a lot of flip flopping going on. So I don't know if you have any thoughts on the messaging or what we're seeing or how markets are reacting, but I think a lot of people seem to be doom posting a lot on Twitter and talking about how the sky is falling. And I don't think it's actually going to be the end of the world, but correct me if I'm wrong.
Yeah, I mean, I try to keep kind of like a flexible mind in both directions. I think, first off, I think liquidity in the market has been pretty thin and started getting thin towards the end of last year. You had this election pop where so many different names kind of went nuts, other names didn't. So this divergence happened where the market popped, but not all the stocks in the actual market followed that directional move. And then earnings started becoming a little dicey last quarter. And now you have on top of that layering in all this uncertainty in DC and now the China stuff and the tariff war, trade war. So I think it's kind of like a multi-layered thing. I know people really want to blame it all on Trump. And I think, look, frankly, over the last couple of weeks and months, that's definitely exacerbated the issue. And I find it hard to believe that there isn't some sort of investor distrust in the US financial system in a way that hadn't really existed a few months ago.
Well, just look at gold too.
Yeah, I mean, gold, you're seeing it with gold, you're seeing
Yep.
it with rates, you're seeing it with the dollar. Like all of a sudden the United States is an emerging market, apparently, with how those three things are moving directionally in tandem. So, I mean, it's something to be mindful of. And I mean, I follow technical analysis too. So, I mean, the market's just been technically weak for a long time now. Even today, we're chatting on Wednesday afternoon. I mean, it's already it's fading this pop. People are going to say it's because of Trump. Yet, like, yeah, it's hard to not conclude that. But just technically speaking, all that's happening is it's a failure for the S&P to be able to reclaim its 21 moving day average, which The index has been below the 21-day moving average for over 2 months now. So that's just going to be a hard thing to reclaim. Who knows? Maybe mega cap earnings get us there. Maybe not. But it's just generally a tougher environment. I have no firm read on any of this stuff in terms of like where it's going. I think a lot of people right now tend to have very sweeping conclusions, either almost like directly correlated with their political affiliations. I'm kind of in wait and see mode. I haven't really been in a big rush to do a whole lot. Like yesterday, I executed a couple trades, but I'm not like I'm not in a very gigantic rush to move in either direction. So we'll see. I mean, we'll see. I'm guessing you can tell by my tone that I feel like sometimes saying I don't know is is an appropriate humble response.
Yeah, I totally agree with you there. That like there are certain things where I look at broader markets and I see people that like they feel the need to comment and have a strong opinion one way or another. And for the most part, it's like I have strong opinions on certain things I invest in or the direction of certain markets longer term. But if I don't have skin in the game, then I don't really feel the need to get too worked up to have a certain opinion on it. But I think the answer I don't know to a lot of this stuff, I think, is kind of the correct opinion, right? If you say, oh, it's going to be Great Depression, like all these different hyperbolic takes, and then say by June, there's some sort of trade deals with most everyone but China. They're working with China to like come to some sort of resolution. Then is that spell Great Depression? Like, I don't think so. But at the same time, there's no certainty about how this all plays out. So um, I do want to ask, I've seen you writing about was it Zweig breadth thrust, if I'm
Yep,
pronouncing that right.
that's
And
right. Yeah.
there's a couple things there where if you look at if those do happen, it kind of indicates some pretty interesting makes you come to an interesting conclusion as far as forward returns. So I don't know if you want to throw up any charts or if you have some thoughts there, but I think that'd be, as far as a broad market topic, I think that'd be an interesting place to kind of work our way into it.
Yeah, let me pull it up. So basically, bear with me while I'm pulling it up. But I mean, it's not the thought is not completely originated by me. It's a long-standing kind of concept in markets. And
I
here
think it
I'm
was
gonna share
Marty
my
Zweig is his name, right?
Marty. I forget how to. I'm not totally sure how his name is pronounced, but yes. 1 second here. So I'm going to share my screen. Let me know if I think you'll be able to see it here any second.
Yep, there we go.
Yeah. So the concept is relatively straightforward. I'll try and say it in English instead of being really technical. Basically, all it is when in a 10-day period, all of a sudden the market goes to being pretty oversold on like a participation level, just the number of stocks that are oversold to a particular extent. And within 10 trading days, that dynamic shifts and all of a sudden it goes to pretty overbought, which basically is referred to as a breadth thrust. And
say that 10 times fast.
Yeah, exactly. Say it 3 times fast. But the data on it is like empirical and pretty conclusive, where whenever that happens, forward returns on basically any kind of intermediate term outlook. I mean, short term too, but intermediate term is the bigger focus, are pretty tremendous. And at a bare minimum, it indicates that when this dynamic exists in the market, a bottom is in. Like whether you agree with it or not, like I don't really, frankly, like doesn't matter what anybody thinks. The data is the data. The only time markets have continued to be pretty challenged is effectively just, I think, like 2009, if I'm remembering correctly. I'm trying to read this chart. It's a little tight. But anyway, basically the
Well,
point.
it looks like that one in 2009 is kind of when things were bottoming out, right?
Yeah. So I guess the point really is like if this is in fact what we're getting in the market, which is not going to be confirmed until possibly today or the end of the week, you have to be mentally flexible enough to consider the possibility that April 7th was the kind of like the interim bottom in the markets. I'm not I have a hard time just like making that sweeping conclusion. It's not necessarily something that I feel very passionately. But with that said, I think people need to at least be open to it, because I've been having conversations with a lot of folks, and I find it really interesting that people, a lot of people think we haven't bottomed. A lot of people think there's going to be chop. A lot of people think that any move up is going to be rejected immediately at whatever technical level you want to use, just basically not that much higher than the current price. And nobody nobody is even remotely open to the possibility that the stock market can rip.
Yeah, I think to add to your point, I think it is kind of funny to see how bearish like sentiment has gotten just in the last month, really. But you kind of look at some of the fund manager surveys and all these different sentiment indicators. I think it backs up what you're saying of even if people are saying, yeah, there might be a bounce, we think it's short lived. I mean, like I don't have any strong opinions on it either, but it is something that I've gotten better at is being able to see when everyone's on one side of the boat expecting a certain outcome that typically is not what happens in financial markets. So I don't know if you want to add to that, or I think that also applies to energy if you want to start moving into that topic. But
Yeah, I just think I wrote about it last weekend, and again, I want to emphasize that I'm like, I know I run the risk of sounding like too bullish, and again, I mean, like I'm not positioned like ultra aggressively in the market right now. I just don't think it's that kind of market. You can kind of like layer in carefully and manage with quite a lot of caution right now in terms of your open book. That would be my advice, but it's just like if you go through the laundry list of things that's going on in markets right now, right? I mean, like everybody's pulling guidance this quarter. There's a lot of economic uncertainty. You have a trade war going on. Like things feel pretty negative. I just, it's like if you're just looking from a bearish tilt, what shoes are left to drop? They're just sort of like, it doesn't really feel like there are that many shoes unless you straight up think we're going into like a really horrible recession. Like I think you can make the argument, coherent argument, that we're in one now. Like you can make an argument that we're in one right now that's already in like the sixth inning or something. So it's like if you're positioning all of a sudden now to initiate like a bearish tilt, I think the risk is to the upside.
yeah, no, I think a couple things have a lot of people scared. I think part of it is what's going on with the dollar, what's going on with bonds, what's going on with gold. I think more what that says to me is there's a lot of capital sloshing around, and some of that is money going back to Europe, and other people talked about that. But I think a lot of people are just looking at it and saying, okay, do I really want to hold long bonds here? Probably not, unless, yeah, I mean, the way I kind of look at it, I've written this several times, and even if rates go down, I think longer term, like 5 or 10 year outlook, by the end of this cycle, whenever that is, like people will call the TLT ETF the toilet paper ETF. But I mean, I just kind of look at it as not there's not going to be much certainty until like trade deals are made. But I think I don't know if you listen to Brent Johnson at all, but I think part of what I kind of think has happened is I don't think it's really the end of the dollar. I think it's more one of those like 2 week or 1 month pullbacks that really reinforces the dollar milkshake of okay, this trend is going to continue, and I think there are better places to be than like US big tech, but I think the US has certain durable advantages as far as financial markets and um, other things going on. So I don't know if you want to add anything to that or if you want to jump right into energy, but I think there's certain things where I've seen, I think at least 5, 6 different podcasts that have talked about the end of US exceptionalism in the last like couple of weeks.
Yeah,
And
it's becoming a bit of a
it's just like,
trope, right?
it is one of those indicators where it's like, why am I seeing this now? Why is it all of a sudden widespread? And I kind of look at it as like, okay, that's probably a pretty interesting indicator. I'm not saying like there are a lot of sharp people that are talking about it, but at the same time, when it's everywhere from Bloomberg to 6, 7 other podcasts, it's like all within the span of 2 weeks, then it might be a little bit overdone. So,
Yeah, I mean, that I tend to agree with you. I'm just not trying to like, I'm not front running that thesis with like incredible amounts of long exposure right now
mm,
because just technically the market is still in a tenuous spot in my opinion. But like I keep saying, I think if all of a sudden in the last couple weeks is the first time you've been bearish, I think you're kind of late to that party. Um, I mean, who knows though? We'll see. I could easily be wrong. I just have a I have a very hard time connecting the puzzle pieces right now, such that 6 months from now, the economic outlook feels significantly worse than it feels today.
yeah. And if you think markets are forward looking, I think that's kind of baked into the cake already for a lot of these things. But
Yeah.
um,
Yeah, sorry, I don't mean to interrupt you. I mean,
yeah, go for it.
I will caveat like there's a lot of unknowns, right? I mean, there's definitely companies that oh, sorry. There's definitely companies that are cutting spend and opening less stores and hiring less people and firing more people. So like there definitely is risk that what we're talking about is wrong. I just don't perceive it as prevalent relative to the bull case right now.
Yeah, especially if they fire up the liquidity bazooka sometime in the second half, which I've been hearing might be the case from several different people. But
Yeah, I mean
um,
they basically declared that put already. It's just kind of like when.
yeah. Um, Moving on to energy, I think that is one of the spaces where I've been beating a dead horse that I think we're in the lull phase of an oil bull market, basically broad commodities bull market. And if you look at history, gold tends to lead a lot of these markets anywhere from 12 to 18 months. And obviously, gold, despite its 3.5% drop today, has had a really strong move in the last year and a half. And you have gold to oil blown out to all-time highs, basically, or close to it. But I think there are a lot of things lining up for the next kind of 6 to 18 months, whether it's shale in the Permian or OPEC bring back all their spare capacity. A bunch of different things I think that are very interesting. You see inventories continuously drawing. But I'd be curious to get your thoughts on energy in general, maybe your thoughts on natural gas while we're at it, some of the equities you like, and some of the things that you're watching as we kind of get into a period where it seems like everyone, I think, is offsides on their outlook for energy over the next 6 to 12 months. But that's my biased take. I'm talking my book a little bit, obviously. So tell me, tell me if you think I'm on the right track or if there's something different you're seeing.
Yeah, so I mean, I think very much in line with what you think right now, where the supply side is going to be sooner than later. The supply side is going to be impaired, and the demand side is going to ramp in a way that supply won't be able to match. Um, I mean, it's just basic fundamentals, similar to what happened in 2021. I mean, I don't think it'll be quite as dramatic because the world isn't ending the way it did during COVID. But I mean, between what's going on with Saudi and OPEC ramping, and US shale is pretty clearly in terminal decline, in my opinion. So, I mean, all the production that's going to be sidelined over the coming months because of what's going on with oil prices and US shale and the distrust of the Trump administration now. So that's one thing, right? So that basically takes out a lot of marginal supply in the market. And then all this economic uncertainty, once we come out of that, whenever that will be, I mean, different people will say different things, but at some point, presumably in the coming year or so, we'll turn out of whatever it is that we're in right now. And when that happens, you're going to have global stimulus. All these different countries around the world are stimulating, between China, parts of Europe, parts of South America. And then on top of that, you have this dynamic where with what's going on from a US policy standpoint, I think a lot of countries internationally are going to realize that what the most urgent way to stimulate will be by stimulating demand domestically. So that is going to be another tailwind for commodities. So I think sometime sooner than later, the market, and the market's not positioned for it right now. I think the commodity bull case is growing stronger by the day. And at this point, the predominant risk is, I mean, frankly, like a depression, like something that's worse than just a recession. And I have a hard time piecing that together with all the stimulus that's going on or about to be going on. So all that kind of 2 + 2 gets you to the point where oil, gas, and just the broader commodity complex, but I'm mostly focused on capturing it in oil and gas because, frankly, I think everything else is like a second derivative of that. It's gonna rip at some point in the next few years, and all you have to do is just try and be patient. Try not to front run it too aggressively, because if you're wrong on timing and you front run it and it doesn't work out, you can get hurt pretty bad in commodity names. But I think it's gonna present a lot of upside in the coming years.
Yeah, I think I don't think it'll be a whole lot longer here, especially with shale decline rates and what that means for the next 3 to 6 months, especially if you have guys lowering capex plans. And I think the shale treadmill definitely comes into effect. But as far as your views on some of the different equities, like I know sounds like you tilt more towards energy, oil and natural gas versus other commodities, other metals, but are there any favorites you want to talk about here, or anything that kind of catches your eye as far as, hey, I think this is going to be a good place to be? I know you've talked a little bit about the gassy names in the past, maybe a little bit about LNG as well, but feel free to go into anything you want from that question.
Yeah, so I mean, on the natural gas side, I think we're going to continue wanting domestically. I think the United States is going to continue trying to push its LNG industry and just ramp that. I think you've basically seen Besant talking as part of his plan about how we want to increase energy production by 3 million barrels a day of 3 million barrel oil equivalent barrels a day. Sorry, it took me a minute to get that out. So that in and of itself, the oil equivalent barrels is an indication that they themselves acknowledge that part of, or frankly, a lot of that ramp is going to have to come from natural gas, specifically for the LNG push.
Mm-hmm.
Now, I mean, that's good and bad depending on how you want to construct a bull case, right? Because if you're going to keep ramping supply, how is that going to be good for the price? But I think between what's going on in the Permian now, associated gas, I think sooner than later is going to start coming down. And on top of that, I mean, just the global demand for this stuff is going to continue to skyrocket. So with that in mind, I think natural gas is going to run up in the coming years. So Antero is a name that I'm looking at for that. I played it after COVID when it ramped up pretty significantly due to the supply-demand mismatch. But I like them relative to other natural gas producers because they're still liquid. Like they're still liquid enough. It's like a big enough market cap. It's like $10 billion market cap, somewhere in that neighborhood. They're unhedged. The CEO owns a ton of stock, so he's aligned with shareholders. Debt profile is very manageable relative to peers. The asset base is pretty good. They have not been in a rush to do any M&A over the years, which is a testament to the asset base, in my opinion. They have a lot of firm transport, so they have pretty good operating leverage when that gas prices run up. Get it where it needs to go in all the premium end markets, specifically like the LNG fairway in the Southeast. So it's just relative to like the EQTs and the Expand or Energy. I still haven't said that out loud enough relative to Chesapeake. But I just think if you're looking for a tool in the nat gas producer complex, that's probably the name, at least domestically. But I mean, look, it's a mature name. So even with everything that I'm saying, it's not like I'm telling you it's gonna whatever triple or anything. It's just it's a good way to play the thesis. Another one is Williams. I think if you look at the technicals, it's been flirting with an all-time high breakout. And the base on the stock goes back like over 10 years now. So like the last time it was at or around these levels was like 2015. Let me pull it up one sec. But I mean, and they are like the granddaddy pipeline company. They have the number one undisputed asset in Transco. That's not changing. Nobody else can build anything that can match Transco. Nobody else is going to. Kinder's the same idea, but I think Williams has a little bit of a better asset base. But here, let me.
What's the reason on that specifically? Like, I'm familiar with some of the pipeline companies, but not down to the individual asset level. What's the reason that you think Williams is kind of well positioned on that front?
Well, Transco is just like the most like all-encompassing pipeline that we have, just based on where it originates and where it flows down to. Just like originates all the way up in the Northeast, goes all the way down to the Southwest in Texas. So it just hits all of the important end markets, and just frankly, no other pipe has that reach. And it's just not going to get built, in my opinion, between now and.
Well, what's the company that's been trying for, was it the Mountain Valley Pipeline for, I don't know, 5 or 10 years? I think it's
yeah, EQT got that off the ground. They're
okay.
in it. I mean, not EQT literally, but they own a gigantic stake in it now. But I mean, that's a drop in the bucket relative to Transco. Yeah, MVP is nice because it accesses like a lot of the data center demand. But in terms of like geographic span and scope, Transco is like number one.
Okay.
So I have the Williams chart up. So this is the monthly chart. So
is that
each
Williams?
Of these,
I'm seeing Bitcoin.
Oh, let me pull it up. I had Bitcoin here. Let me just show it. So this is Williams. Let me give you the monthly. I had the monthly up in a different tab. I guess I didn't show it. One sec. So here's the monthly chart. So for anybody following along on the video, every one of these individual bars represents 1 month of price action. So you can see on the x-axis, this goes back many years at this point. So the levels here where Williams has been flirting for better part of a half a year now is also right around where the stock put in a top in 2015 and 2015 and 2014. So this was like a double top right here when the MLP boom was happening. Then it
Yeah,
crashed out.
when all
So
the shit hit the fan in the energy space,
exactly,
basically. Yeah.
exactly. And then it's put in this big cup, and now it's just been like loading here. So there's no way to know with the guaranteed certainty that the immediate move up is going to just be out and to the right, right? Like, I mean, you never know. It could handle out. It could just form like this is the cup. It could form another handle before it's ready to go up. I don't know. But the point is, I mean, if you are bullish the natural gas complex, this is a very logical name to play. It's just like a long-term compounder. Uh, the chances of it just like blowing up relative to producers are pretty low. Like producers have like the maximum amount of leverage to the underlying commodity price. It's not quite as dramatic for a pipeline company. So definitely a good way to play it. They're always buying back stock. I think as of today, their yield is somewhere in the neighborhood of 3.5%. It's the type of name you can like go to sleep feeling comfortable owning. And then, I mean, like I said, think about the measured move. I haven't really calculated it, but I mean, this is a level that's more than 10 years, almost 10 years old at this point. So if it's able to break out of this, it's probably going to lead to a pretty violent move, in my opinion.
Interesting. Yeah, I know the pipelines in general are typically not as high octane as some of the natural gas producers, but as far as the like it's kind of the combination of infrastructure and natural gas and volumes and all these different things. Where if you look at some of these companies, like I owned Enterprise Products Partners for a while
Yep.
and a couple others where um, like those things will just churn out dividends, especially if they're well managed, or I guess distributions if they happen to be partnerships. But a lot of them are just income producing machines, and I think the valuations are not super demanding, even after kind of the COVID recovery where they got ridiculously cheap. But I think they are kind of interesting across the board. I know the other infrastructure one that you've talked about a bit is some of the LNG plays. If you want to go into some of those, I think I have questions about the long-term future of kind of LNG transport and shipping and the viability there. But I'd be curious to hear your thoughts on some of those names.
Yeah, 100%. So, I mean, this has been a space that's been pushing to get built out for many years now. We got it up and running, at least from an infrastructure perspective, over the last, I don't know, 10 to 15 years or so. Cheniere is kind of the incumbent big boy. You have Venture Global, who just IPO'd, and you have a fragmented space with a bunch of like smaller players too. But the idea is straightforward. Like, we have all this gas. Let's ship it out to all these places globally. Because I mean, there's so many places in the world that import energy. You need natural gas to keep your home warm. You need natural gas to power various industries, so on and so forth. So if we have the supply to bear it, let's become a leader in the space. That's kind of been the premise. There's been a lot of regulatory overhang out of DC, given it's been mostly Democrat run over the years, especially in the executive branch. And now that's kind of changing. So company like LNG, Cheniere had a pretty big bump after the election, and unlike many other stocks, it's held that bump. And it's just like a strong name, buys back a lot of stock, initiated a dividend last year. And like I said, they're the incumbent in the space. They have the most infrastructure up and running. They have stuff off the ground that others don't. So that's going to position them well longer term. That's kind of like a relatively high level view of the landscape.
Yeah, I know Venture has had a rough go of it since their IPO, but I know next to nothing about that asset. But definitely not the start you'd want to see in the first like 3 months of trading with like a 60% haircut or whatever it is. But
Well, you know
um,
what the problem was, in my opinion? I mean, I don't really have like earth-shattering analysis on that one, but the bankers that were running that IPO clearly just promised something that proved to be unattainable in terms of valuation.
hmm,
I haven't actually compared what Cheniere's valuation is to venture. Um, I would guess, without doing the really running the math, that Cheniere probably trades at a premium for all the obvious reasons that they've been a public company for a long time. The market knows them. There's not much price discovery that has to happen. There's a lot less unknowns about the name relative to like new inventory like venture. But the bankers seem to have promised or miscommunicated something or agreed with the venture management team such that they just could not deliver the price that was discussed at the beginning of the IPO process.
yeah, and
I
you
haven't
get
been really,
IPO shares dumped too, so that
yeah,
probably
and then
doesn't
the
help.
IPO shares dumped, and I haven't really been following it. I mean, I would probably say that it's in the process of post IPO price discovery right now. I mean, if you're bullish the space, I wouldn't really blame you for buying it on the thesis that money will eventually start flowing to it. I just don't really see a big reason to do that relative to Cheniere. It's just like there are
Yeah,
very few unknowns with Cheniere relative to venture, in my opinion. So just like an easier name to own.
yeah. The 30-second look is Cheniere market cap at 51 billion, venture at call it just under 22 billion. So
Yeah, I mean that's just like size and scope. I just mean that I don't know necessarily like what the in terms of not the market cap but the valuation actually. And the valuation, like looking up valuation for names like this is always wonky because it's like what's the E in PE for an LNG shipper?
yeah,
For an LNG exporter, right? It's like it's hard to price that. So like stuff like Yahoo Finance or whatever trading view aren't going to have like a particularly differentiated view on that. But I would be interested. By the way, I'm not asking you. I'm just like saying this out loud. I would be interested in knowing like what the valuation is for VG relative to LNG right now. I would guess that it's probably at a meaningful discount.
yeah. No, I would assume so. I'm not sure if when you're looking at some of the fundamentals of all these different names, if you prefer like price to cash flow or some of these different metrics. I know PE, especially for some of the different stocks, like doesn't really give you a whole lot as far as accurate view of the valuation. But like you said, the basic stock screeners on, say, Apple stocks or Yahoo Finance or whatever you might be pulling up some of these tickers on is not like don't trust those numbers automatically is what I would say, especially for anything energy related. So
Well, yeah, it's funny. I had this conversation with somebody last week that I was talking to, and I was talking about Antero, and they were like, "Oh, well, what was their EBITDA last year? What was their free cash flow yield last year?" And it's like people who don't really follow the space that closely, it seems dismissive to say it probably seems dismissive to the recipient of this on the other end of this conversation, but it's like it kind of doesn't matter what their free cash flow was last year. It kind of doesn't matter what their EBITDA was last year. Like if you're investing this thing, it's on a forward-looking basis for what you think the underlying commodity is going to do, and you for whatever reason you think a given name offers you torque to whatever your thesis is on the commodity, right? So like if I were to do analysis on Antero and say, oh, well, all of 2024, Henry Hub is running between like $2 and $3. And I think Henry Hub and their realized differentials and all that kind of stuff is going to 3x, or I think it's going to 2.5x for the next 2 to 3 years. It's like, how important is it what their EBITDA was last year?
Yeah, and Terra's a double if that's the case, at
Right.
least.
It's like, who cares what their EBITDA was last year? It has nothing to really do with the thesis. It's
Yeah,
not like they're a widget maker where it's like the widgets will always cost this much money, but our business through differentiated management and through differentiated execution was able to squeeze out more margin. It's like, no, the underlying commodity ripped, and because of our asset base and because of whatever our balance sheet, we were able to be positioned better than the peers for when that happened. It's just like it's a different dynamic than it is for like a normal widget making type of company where you can say, oh yeah, the earnings inflected because of XYZ.
yeah. Profits up 10%. All these different metrics. It's like, yeah,
Yeah.
no, it's completely different. So
Or like TAM expansion or whatever you want to say. Like it's just not the same type of thing.
yeah, no, I think it definitely is a completely different dynamic as far as things to look for. But before I kind of move on to some of the other geopolitical stuff that I wanted to ask you about, are there any other areas or sectors or parts of the market that you find interesting right now? I know a lot of people have talked about gold miners lately. I think that's probably not the right time to be chasing some of those, but I know there's lots of spaces where I think opportunities are out there. But are there any spaces outside commodities or in other commodities that you think look appealing right now?
Yeah. So I'm very, I'll caveat before I even dive into this that I'm not like at all some sort of like crypto maxi person. Like I'm not some sort of, I'm not like the guy that's been like pounding the table for Bitcoin forever. Like I'm kind of indifferent towards it. Like I can appreciate its place, that it has a place in the world, but I'm not like, you need to have a whatever percent allocation to it. I'm kind of in the middle basically. Like I'm normal-ish on Bitcoin. But if I told you at the beginning of this year that the S&P 500 would have like a 19% drawdown, what would you tell me Bitcoin did during the same period of time?
I mean, given past history, you'd have to guess at least 25, 30%.
You would not think more than that?
I mean, it seems like the volatility in Bitcoin over the last 2 to 3 years has not been as extreme. Um, at least once things kind of calm down. But I mean, I would guess at least 25, but you could make an argument for like a lot more than that. But it has held up like noticeably well relative to some of the equities.
I mean, so I just found it interesting. So I posted it a little while back. I don't have it up this second. It's not really the most important thing in the world. But in 2022, when whatever was going on in the market was going on at that time, I mean, Bitcoin basically had like an 80% drawdown, right? I mean, it went from like a 70,000 peak in Q3, Q4 of 2021, and then it eventually ran all the way down to like 15,000. And here we had it go from whatever 110 to bottom. If we'll see if it was the bottom, but the bottom over the last few weeks was around 76, and now it's back up to like 93, 94. I also find it interesting that it's either a lead indicator for the Nasdaq now, or it's decoupling from the Nasdaq. Like it's hard to know which, but it's the obvious observation that it's just a levered Nasdaq is not quite the case anymore.
Here's the thesis I've gotten from some of my buddies that are more into the crypto side than I am is that, right, it has basically been Bitcoin effectively trades like TQQQ, right? And that over time is going to change to Bitcoin is going to trade something closer to like a 2 times gold type deal where it becomes more of a they think it's going to be sound money, like commodity, like reserve asset type deal. That's the long term future they see. I'm not sure I agree with all their points, but I can definitely see how it is decoupling from like the levered NASDAQ trade that it has been for, I don't know, a long time now.
Yeah, it's just interesting to me. I mean, especially over the last week or two, I was calling it out, and my Substack and on Twitter, I was basically pointing out that Bitcoin got really tight for about 2 weeks after the market bottomed on April 7th. And even while the dollar was having its trouble and rates were having their troubles, Bitcoin was like shockingly muted. And then it just like ripped back out and went from whatever it was, like 83, 84 to 93 today in just a couple of days. That's what the thing does, right? Like it's 10 days. It makes its move like in 10 calendar days of every given year, or whatever the math is. But I just find it interesting what it's doing right now relative to the dollar and relative to rates.
Yeah.
Like dollar down, rates up, Bitcoin holding up fine and even actually going up in price now. It's just like it's an interesting dynamic. I have a hard time deriving like a firm conclusion on it, but it's just interesting amidst the backdrop of everything else that's going on.
Yeah.
And it doesn't, I'm not like aggressively allocating towards it. I bought a little bit of Bitcoin yesterday when I saw it pushing out in the morning, and I own a little bit of Coinbase, but I'm not like, I'm very far from like a true believer who thinks that Bitcoin's going to God like whatever $1 million or something like that. We'll see. Like,
You're not Michael Saylor.
No.
Yeah. No, I think to kind of segue into the last point, I think what you're talking about with certain market correlations everyone's gotten used to, whether it's between different currencies, bonds, commodities, gold, Bitcoin, stocks, all these different things. There are certain relationships that are breaking down in interesting ways, I guess the way I'll put it. And I'm not sure if you have any views on the geopolitical situation as far as where things stand in, say, the Middle East or Eastern Europe. We talked a little bit about China with the tariff circus, but do you have any views on how that might feed into financial markets, or kind of what you see as far as the future for some of those different regions?
well, I mean, I don't have a lot of like geopolitical views, but I think you're pretty empirically seeing money flow out of the US and flow into other places that are either expanding or trying to grow or trying to bottom, right? With this like South America trade that's been happening, led by Argentina a few years ago, but now it's expanding to places like Brazil and Colombia and Chile. Chinese markets caught a huge bump at the beginning of this year too. So, I mean, the market's basically seeking out places that it feels are undervalued and taking the money out of the US market that it perceives as overvalued and just basically reallocating, right? So I think that in and of itself is an interesting indictment of kind of the current state of play. But in terms of like actual geopolitics and the players involved and what I think is going to happen and all that kind of stuff, I have a very hard time personally playing that game.
Yeah. No, it is interesting because you see some of these different moving pieces, whether it's like a ton of gold being moved into the US out of Europe in the last 3 to 6 months, but really like ramping up in, I think, December and January and February. But it is something from my knowledge that you really only saw before World War I and World War II. But I know there's several people I listen to that are kind of calling for Europe to do, I think, something stupid and basically get involved with Ukraine and Russia. But I think it is something where, like going back to energy specifically, or you don't build a geopolitical, like a bull case on the geopolitical potential shit show. But at the same time, you look at like the supply side and what's been going on, and it seems like things have held up fairly well. And I would say at whatever 62 a barrel, there's not a whole lot of geopolitical risk priced into anything energy related right now. So That's kind of a long-winded rant on the state of things, but I do wonder if things flare up kind of in the back half of this year, which I think is definitely a possibility, where that leads for certain different sectors. Like you probably see gold take off. You probably see capital inflows for the U.S. again. But I don't know if you have any thoughts on the chain reactions that might set off.
Yeah, I mean, look, I think it's interesting, right? I've had this exact conversation with a few different people, and the question basically becomes like, okay, well, it feels, to your point, almost like geopolitical risk is not priced into anything right now on the commodities side, and that is a very interesting dynamic, in my opinion. I mean, oil is whatever it is right now in the low to mid 60s, and there's obviously some economic uncertainty, and positioning is completely bombed out, as all the data indicates over the last few weeks. But I mean, the the bull case I've constructed, and the bull case a lot of people have constructed, is really just supply and demand driven. It's like it doesn't even factor in, God forbid, what happens if there's some sort of geopolitical instability. Because right now, I don't think it feels like geopolitical instability is priced at zero right now.
Yeah, I tend to be in the same camp. That's where I look at it and say, okay, like what is your downside realistically with some of these different energy stocks versus what do you think the upside is over, say, a 3 to 5 year period, just from the supply and demand fundamentals? But then if you have a wake up call on the geopolitical side, I think that's something where people will eventually re-examine, hey, what's like what is supply actually at? Why are inventories continuing to drain? SPR is still refilling. Like what's going on here actually, instead of the narrative that OPEC's going to flood the market, it's all over for oil bulls, like whatever you see on Bloomberg, right? It's I mean it's constant from those guys, but I think that's basically just propaganda. So um yeah, I don't know if you have any thoughts on that, or some of the different things that you see, or maybe I guess I'll rephrase, as far as your experience in industry and working in the energy space on that side of things. Does that kind of allow you to see some of this stuff play out in slow motion or play out ahead of time?
Yeah, I definitely think so. I mean, it gives me an appreciation for the space that a lot of like generalist investors don't have. I feel like there's become this dynamic where energy is whatever it is now, like 3% of the S&P 500. It's just such an afterthought. It's gotten to the point now where most people don't even really, they don't even know what names to even look at to express a bullish energy thesis, aside from like Exxon and Chevron. Like a lot of people come to me, and when I talk about energy, they start talking about these like AI power generation names like Vistra and Constellation, which are good businesses, and the stocks have run up. And I mean, you could certainly have like a constructive thesis on those names. I'm not dismissive of them at all, but it's just like it goes to show how completely forgotten and ignored the fossil fuel names are. Um, so I just think that makes for an extremely interesting dynamic, and it's just like a testament to how not cared about the space is from the investor community right now.
Yeah, I think those are the types to just go buy XLE without even realizing that basically is what, like 60% Chevron and Exxon, somewhere in there.
Yeah, I think it's like 40 or 50% now. But I mean, yeah, but it's a super interesting dynamic, because it's something I've been grappling with. I think we were talking about it before we started recording, but it's like if you think shale is in terminal decline, so the shale names are just not names that you're going to want to own unless you think oil is going to whatever 150 a barrel, which I mean it's just going to be, it could, but I have a hard time seeing that sustain for any meaningful period of time. But I don't know, I could be wrong. But so if that's off the table, then you start looking at international names, and international names can really only attract so much money So, I mean, yeah, you could go to the CNQs and the CVEs and the SUs of the world, and then go more international, go down to Latin America as well if you want. And there's definitely like a lot of convexity and upside there. But in terms of like actual dollar flow, it's hard. It's hard to find names that you can see attracting the requisite dollars to re-rate. So that's definitely something I've been like grappling with myself, and I'm trying to like map out the longer term thesis and figure out like where and how do I want to be positioned. But I mean, we'll see, I guess. So aside from the obvious ones of Chevron and Exxon, it's like where would you want to be? That's why that the Sable offshore that you were talking about a little bit, and sounds like a lot of the listeners have already had their ears chewed off on that name, so I won't go into much more detail. But it's just like an interesting point to make given this dynamic.
Yeah, that's definitely Sable's definitely like a one-off situation, and I don't think we'll really ever see anything like it again, to be perfectly honest. There's a whole bunch of things that had to happen, and it's a one-off. There's not, I think, really anything quite like it out there. But I guess the last question I'll kind of fire at you as we start to wrap up here is, right, you don't see like sustainably like much higher oil prices at say all-time highs like longer term out, say 3 to 5 years. But what I'm kind of wondering, this is a question I've been kicking around with some of the guys I talk to, is like I think we're in a durable bull market for gold, and I'm wondering if that eventually starts to act like gravity with some of the other commodities where, right, even if you think gold to oil blows out, then, right, say gold at 5,000 an ounce, like I'm starting to wonder if at a certain point that starts to drag other commodities higher, just because there's like a tie to the physical, the real, and stuff that can't be printed. Because, right, if you're telling me gold's going to go to 5,000 and oil's going to stay at 60, like I have a really hard time seeing that. I'm not saying we have to go to like revert to $10 or 10 barrels per 1 ounce of gold or anything like that. But I kind of look at it as like, hey, even if you get to 5,000, 6,000, 7,000 on gold, which is where I think we're going, right? Even if you stay at 40 or 50 to 1, I think it eventually starts to drag some of these other commodities higher, whether it's silver and platinum, oil, whatever it may be.
I mean, I agree. I have a challenging time seeing this not spill out into the broader complex if gold is going to stay bid like this. I mean, all this like fiscal impulse is just not going away globally, and I mean, eventually it'll start factoring in here domestically in the U.S. as well. When you pair that fiscal impulse with an economy that sooner or later is going to bottom, at least here in the United States, like different people will believe different things in that regard, but I think seems reasonable to assume that whatever it is that you think is going on in the United States right now, we're probably going to bottom out of it within the next year. Like, I think we may be bottoming out of it right now, but even the biggest bears, it's like, unless you think we're going into a depression, it's going to bottom out. So when you pair that with this fiscal impulse, it's like it's going to be hard for commodities not to rip.
Yeah, I was while you're talking there, I'm pulling up a chart because this is like basically the visual version of what you're saying right there with the fiscal and whatnot. But this is I'm pulling this from Crude Chronicles. But basically, if you look at what I think is going to happen in the next, I don't know, 3 to 5 years, it like that liquidity eventually goes somewhere, and you kind of see these patterns repeat over and over, where if you get rising M2, populism, all these different trends, it kind of spills out and doesn't just all get soaked up by gold, I think, to your point.
Well, yeah, it's just like it feels pretty unreasonable to believe that, in my opinion.
Yeah. So I don't know if you have any topics that I skimmed over you wanted to hit on before we start to wrap up, but I do want to kind of see if there's anything else on your mind, anything that you think we missed, but basically anything energy, markets, or geopolitical, whatever you think might be interesting to wrap up with. I think there's a lot of stuff we hit on, but um, I feel like there's maybe a couple pieces that you might want to add here as we start to wrap up.
Yeah, what's your viewpoint on the economy? Like, how do you feel about what's going on?
Yeah. So I see what you did there, by the way, turn that around on me.
Yeah, it's good.
Well done.
You
But
gotta ask some questions yourself, man. It's important.
yeah, no. When I'm podcasting, I try to talk as little as possible. It's funny. I have some people comment like, "Oh, you talk too much. Oh, you don't talk enough." I'm like, you can't win with these people. But anyway, um, I think the uncertainty will persist until we start seeing trade deals. I think the trade deals will start happening fairly quickly with Japan and Europe and India and all these other places. I think the China thing, I've talked about this a little bit in the past, where I think there are non-economic motivations to what's going on with China, right? Whether it's the 100,000 fentanyl deaths in the U.S. every year, or intellectual property stuff, or some of these different things where it's not just purely okay. They're dumping goods on the U.S. and it is they're manipulating currency, whatever the list is, right? The non tariff trade barriers, I think, is what they called it.
Hmm.
Um, and one of the things I think not many people are pointing out, like they'll talk about China and say, oh, they're going to become a consumption economy. They're going to follow the US model. And I look at it as kind of the capital cycle argument, specifically for China, where with all the subsidies, overinvestment in manufacturing, and all the stuff they've done to prop up that and say real estate and all these different areas of their economy, right? That's created a lot of malinvestment. They're not going to be able to sell a lot of those goods to Chinese consumers at the same prices as they would to, say, US consumers. And if their plan is to basically just consume all those things internally, I think China's economy could be in very rough shape in if this thing drags on for a lot longer. I think what probably happens is there is a resolution where we basically say, look, you're getting a 20% blanket tariff. You're going to stop, like, cut the shit out with the fentanyl. You're going to stop manipulating the currency. Because I think the tug of war, main tug of war going on is U.S. needs Chinese debt markets, and we have become reliant on their supply chain. But the Chinese economy very much needs the U.S. consumer, and so that's like the tug of war going on right now. And I think there's a solution where we kind of meet in the middle. But until that happens, I think the uncertainty is going to be the name of the game. But I don't think the economy is going to collapse. I don't think it's the end of the world. I think that markets are probably going to chop or hold up fine. I think commodities in general are going to start to wake up here. Um, and I don't know if it'll take all that long, to be honest. I think the back half of this year is going to be very interesting for energy with kind of the 3 to 6 month time frame, especially on shale and what happens to supply there with decline rates. But that's kind of a long rambling answer. But I think it's basically things are uncertain until they're not. I would guess there's a lot more clarity in the next couple months. And I think the back half of this year is when market starts to have a little bit of an oh shit moment when it comes to oil. So
It's interesting. Yeah. I mean, I have a hard time disagreeing with you.
yeah, no, I think it's really hard to know for certain, but that's kind of the general view. I think I don't really see equities market crash either. I still think bonds like TLT could get ugly. I'm not sure what I think of the dollar, higher or lower, but I think it's probably a little bit overdone. But um, before we actually start to wrap up here, I do want to ask you my traditional closing question, which is what book should add to my reading list? Can be history, finance, investments, or just anything you think would be interesting.
God, it's funny. I read so much stuff, but I can't even remember the last book that I read. That's a really fantastic question. Anybody on here said Harry Potter before?
Nope.
Let's do Harry Potter. I'm going to be reading that. I'm excited about the possibility of reading that to my son sooner than later. So we'll go Harry Potter. It's good to like open up the brain to the world of possibility. It's a fun book for your imagination.
Yeah, no, I've read those. The ones I used to read, like I read a lot when I was younger. I don't know if you are kind of similar age. I'm almost 30, but the books that
Yeah, I'm
I got
35.
into, what's that?
I'm 35, so similar.
Okay, yeah. So the books that I would definitely recommend whenever your kid starts reading, what are they called? The Percy Jackson books. Those were pretty good.
Mm-hmm.
Um, and what was the other one? There's one. I think it's like Ranger's Apprentice or something. Those are like fantasy adventure type books where I think it's like the perfect for like late elementary school, like middle school age range for that type of story. It's not like dumb picture books, but it's also not like super high level stuff, but it's there's actual stories in it. I think those are definitely a good place to look for the future. So I do want to wrap up here, but if my listeners are looking for a place to find you, where can they find you on social media or on Substack?
Yep. So I am on Twitter, X, whatever the heck you want to call it.
It's always going to be Twitter, by the way. So
yeah, I agree. Handle is purple_drink_LLC, purple drink capital. I started a Substack about a month ago, so that's been fun. Excited to try to write 2 to 3 times every week. General thoughts on the market, single name recommendations, a little bit of a half-baked trading journal as well. So that is called Purple Drinks Market Musings. So give it a subscription, give it a read. Paywall's not up yet, so you can get a bit of a sneak preview before that happens.
Yeah, definitely worth reading. I like to take a peek at what some of these people were thinking, especially when they are seeing some of the same things on energy and have different backgrounds, but tend to come to the similar conclusions. So I really appreciate taking the time. I think with that, we'll be wrapping up. Thanks for stopping by, and we'll see you next time.